Good morning, everybody. Thank you for joining us today at the Rural Virtual Breakfast. As usual, we put this on so that we can take a look at all things financial within the COVID environment. I will jump straight in and introduce our presenters or panelists today. First of all, I'd like to welcome Catherine Vickery back again. You're regular on the slot, Catherine. To here, so we're on here. Hello, Catherine. How are you?
Morning, Ben. I'm very well, thank you. Slightly wet and rainy today, but still cheery as ever.
So, for those of you new to the show, Catherine is our rural tax advisor at Old Mill and knows all things about tax and all things about rural as well.
Lovely. Yeah, absolutely. So hopefully we've got some interesting questions coming in this morning.
Yeah, and I've got some interesting questions already prepared for you as well, Catherine. So,
brilliant.
Look forward to that. And thank you very much for joining us. And also today, we welcome back Neil Cox, who is Director at Old Mill and a Rural Accountant. Hello, Neil.
Morning, Ben.
Morning. How are you today?
Very good. Very good. Looking forward to it.
Good. So you've been on this show once before, haven't you?
Twice
now. Gosh. So you're an old hat now, so I'll just give it to you. So I don't need to do very much for either of you two today. I'll just ask the questions and just let you two get on with it. And you changed the tractor in the back of your screen as well, Neil, haven't you?
It's a never present, Ben, don't worry, it's always there.
Okay. Well, thank you very much for joining us today. A bit of housekeeping. I will be recording this session, so if anybody has to drop out, that's watching at the moment, I will put the session onto the Old Mill website, om.uk. I will put a timeline on there as well, so the questions that we asked today will be up on the screen, and you will be able to just flip to the bit that you're interested in. Otherwise, it should last roughly about, I suspect, half an hour, maybe a bit longer, depending on how much Catherine and Neil would like to talk. So we will go straight into the questions, and I'm going to go to you first, Catherine, if that's okay. So I think today what we'll do is we'll talk about any COVID support scheme updates, as we've just had a few announcements last week, and then we might just move on to the tax planning for moving forward, particularly with the announcements of the budget, which has been cancelled and moved to spring next year. But first of all, I'd like to see what, with regards to the COVID announcements and the support schemes, what's the major news really for farmers and for rural businesses at the moment, Catherine?
Okay, I mean, we've seen quite a number of changes being announced recently. One of the key ones that I think might make a big difference is with regards to VAT payments. Now, a number of our clients have deferred their VAT back from earlier on, sort of between March and June time, though we had the opportunity to defer VAT payments that were due. Now, it was meant to be coming in for payment in one lump sum at the end of March 2021. What the government have now said is to ease cash flow for businesses, and rather than land them with one big payment in one go, we're going to be able to spread that payment over the following 11 months. Now, hugely, that's a big benefit for everyone. You're not going to have to find a big lump sum. It's going to be interest free as well, so there's no sort of major disadvantage in doing that. I think that's a big change that's worthwhile. So if you have deferred your VAT, bear that one in mind when you're looking at your cash flow.
So before, Catherine, we were certainly talking about that March 21 deadline, where there would be a cash sort of outgoing, particularly with regards to this VAT. So that is a big relief for farmers, particularly, isn't it, with regard to that? Neil, have you got any other comments on that? Are you seeing farmers reacting to that positively? Is it something that we would be able to advise on them with regards to the regular cash payments out rather than that one-off lump sum?
I guess it's going to be relevant to as a target audience in the farming world. If we bear in mind that, say, a lot of our farming clients, their sales, their outputs will be 0 rated, but particularly relevant for those with contracting elements, or those that might have diversified in some other way with leisure, tourism, some sort of other diversification where that VAT is, is relevant. Yes, it's a little bit horses for courses. Is it a positive? Of course it is, but it's affecting a smaller number rather than the majority of our farming clients.
Okay, thank you. Catherine, do you want to just have a quick word about the 5% VAT as well, please? We know that that's had some extension to it as well.
Yep, absolutely. I mean, they introduced the 5% rate for hospitality businesses, and this is for tourism, accommodation, and anyone serving food as well. But it doesn't include alcoholic drinks, but any non-alcoholic drinks. And they reduced the VAT from 20% down to 5%. Now, it was due to end in January. They've now extended that to the 31st of March, which I think potentially could make a big difference for people. I guess that period isn't known for being a great time of year for hospitality, but what you need to remember is you potentially, if you're running some kind of hospitality industry. Now, I know there's been a lot of diversification. I'm speaking to a number of clients about looking at putting up shepherd's huts, that kind of thing. And actually, if you can get bookings before the 31st of March, and you can get payments in, then potentially you will still qualify for that reduced rate. Now, whether you might want to use that in order to offer discounts or incentives to get money in early for those people that may well be coming at Easter or even later on in the year, it may well give a cash flow boost in those winter months, which might be quite attractive, I think.
And Neil, just on that, are you seeing with regards to your clients, is there appetite for them to diversify? Are they feeling they have to diversify to supplement the income that is being reduced on their main enterprise? Or are they looking just to hunker down, just do a good job and hope for ride the storm?
Again, Ben, I think a little bit of both. I think our farming clients are very the go-ahead clients, or those that understand diversification, realise that you're doing it from a position of strength, not to supplement, or shouldn't necessarily be done to supplement a business which is otherwise not performing. I can understand the point, how can we raise some surplus income, but one should never be done to support the other. But I think overall it's fair to say that our farming businesses have remained fairly resilient over the period of the COVID virus, and that if we take it as an overall view, the agricultural industry has been hit significantly less hard than obviously, of course, many sort of hospitality or retail or other businesses. So I think those looking to diversify will still be doing that because they can see a good positive opportunity, rather than our core business has been so badly impacted, we need to look for additional income streams to support us or see us through.
Okay, thanks, Neil. Probably less relevant, I would say, in the farming industry, maybe more the rural business, agricultural side. But the job retention scheme's had some announcements and changes. Obviously, it was meant to finish relatively soon. Neil, would you be able just to explain that to the listeners?
Yeah, absolutely. Yeah. So the job retention scheme finishes at the end of this month. So the furlough scheme that we're all aware of, and clearly there has been an awful lot of talk that I think the phrase zombie jobs have been created, so that jobs that really aren't viable and don't exist continue just to be supported by the government, albeit in a reduced manner over the last few months, but it's giving, in their mind, false hope and jobs that don't really exist. But there's been an absolute acceptance that just cutting all of the support would, be potentially disastrous for the job market and potential huge unemployment. So to supplement that, there's something a bit more targeted that's come in, which has been replaced by the job support scheme, which will kick off from the 1st of November. That will last 6 months through to the end of April. But on this difference now, and I suppose it's more akin to the flexi furlough scheme, for people to be able to access it, the employees need to be working a minimum 33% of their minimum hours. And then for hours they're not worked after that, essentially the government will top up by 1/3, and the employer also still has to top up by 1/3. Paying essentially each. So you could have a position where an employee is working 33%, 1/3 of their time, and receiving 77% of their pay. As we would expect, the government contribution is capped to just a smidge under £700 a month. So for those that earn higher amounts, it would potentially still means, as with furlough to an extent, people will not be on full wages, but this at least is meant to try and target more viable jobs, i.e. those that, employers that have jobs for people, but where there's reduced demand. And to an extent you can see that where the hospitality side of things, and where it might try and draw it in as a relevance to our farming clients, those that have reduced capacity or reduced demand, that this is still an opportunity to keep those people in employment and still keep their wages up to a sensible level, but it comes at a higher cost to the employer. The one quite useful thing that does link into that is there was the job retention bonus, which was mentioned previously, whereas if you bring back and keep on for previously furloughed members of staff, you can claim the £1,000 bonus. This still, even with the new job support scheme, that is still claimable. But dare I say, again, is it slightly less relevant to our farming clients? Yes. Does it have a relevance to those that have, say, again, have diversified and have venues, or whether it's wedding venues, restaurants, say farm shops? I would almost guess and think it would probably have been as busy as normal, but it's a welcome addition, but say again more targeted, and as with anything, it's not devil in the detail, but the employer still needs to consider, sadly for the employee, is this a long-term viable job, or is this just dragging something out? Support is brilliant, but not at all cost.
Okay. Not complicated at all then either, is it?
I think it's fair to say, Ben, there's a different scale. Some people, for instance, have worked out and saying is actually it will be more expensive for me to keep 3 people on part-time than me just to have 1 full-time person and pay them. So those that work through the calculations, sadly that might mean 1 person stays and 2 people don't. So there is a little bit behind it, and it's not, there's support, but it's not the total answer, sadly, for many jobs.
So maybe we'll move on to something a bit more relevant for the farmers and the agricultural industry, and that would be on the loan schemes. So maybe Neil, could you just talk us through any updates on the loan schemes, particularly the bounce back loan scheme? I know some of our farmers take advantage of that, Sybil, etc., etc.
Yeah. So the loan schemes that the government brought in place, Sybil's first, and then bounce back, which I think, to be fair, has been far more popular with our farming clients. the application process, so to be able to apply for these, has now been extended out till the end of November. So that's a positive in the first instance. And also, we just going back over the basics, you take the loan, it was as well, that's now been extended out to a 10-year repayment profile, and there is also an option within that to move to interest only payment for 6-month periods. Now this is all positive, and this is all helpful from a cash flow perspective. But we must still remember, with any bounce back loans or otherwise, it's still available, it still exists, but you must still be able to demonstrate you're adversely affected. I'm afraid we still have many conversations with clients who say, I must claim this, it's too good to be true. It seems, my friend's done it and asked me why I haven't claimed it. I'm afraid the answer, why did you claim it? Because everyone else has. It still continues, even with the extension, continues not to be the correct reason for claiming this. You have to have that demonstration of being adversely affected. But if you have, and you can, yes, is it a good way to support and grow your business, and the ability? So it's like anything. If you took the maximum £50,000 loan based on your turnover, you still have to know that you can pay back £870 something a month when those repayments kick in. The ability to extend that out to 10 years clearly will help reduce that figure down and potentially make that more viable. But I would still encourage anybody who's looking to take one of these out, one, make sure we'll know that you're financially qualified, but please make sure that you've got the justification for doing it. But remember, it is a loan, and you have to know you can pay it back. It's no different to, would you go and take a hire purchase agreement out for 5 years for £50,000? Well, no, I can't afford it, perhaps. Well, this is still no different. Yes, it's easy to apply for. Yes, it's a very competitive interest rate, but you still need to be sure that your business can use that money to support your business, grow your business, and importantly, pay it back.
I suspect the advice there is speak to your advisor if you think you can take advantage of it and talk it through.
Yes, yeah, I'm still getting now several conversations a week with people considering taking one out, or letting me know that they have taken one out. So yes, it's no, I've said it before, it's no different to any loan. Have a chat through and let's still work out, can your business afford to, I've heard the example that people have taken them out and gone and bought, gone into market and bought significant numbers of, whether it's dairy, cattle, beef, cattle, sheep, whatever else it might be. Of course, we all know it's very easy to spend money. It's significantly harder to then produce the profit or income to pay it back. And I think that just comes into any sort of business planning. Whilst you can access these funds quickly and easily, you still need to make sure that the business model is sound. Whether it's budgets, cash flows. I know they're the words that farmers don't like. What do I want to do one of those for? To make sure you can afford it.
Wise words, Neil. That's why you're the advisor. I will move over to Catherine in just a second, but I just wanted to finish off on this support scheme with the self-employment income support scheme and what changes has been made from there. Neil, I think you need to take this one up again, please. Yeah,
that's fine. So we've had, we went through the initial first round. The second round of SEISS grants, self-employed income support scheme, come to its conclusion at the end of October. But in line with the job support scheme, there has been an effective extension to the self-employed scheme to make sure that those who are self-employed aren't left out. So a third grant will be available, and it will cover from November to January. On this occasion, it will be calculated as a maximum of 20% of your average trading profits. So that means people will be able to claim up to a maximum of £1,875 in total. There will be a fourth grant that will then take us from February to the end of April, so again to fit in with the timescales of job support. But currently that's being reviewed as to what that level of grant might be, and we're waiting for more details to come. As is the norm, they continue to be subject to income tax and national insurance, so no, you don't have to pay them back, but it's not completely free money. But again, the big red flag we wave in front of people, not to discourage, but to make sure you're claiming under the criteria, is you have to demonstrate your business has been adversely affected. Now, in many cases, we know that initially people took these grants, or made these claims earlier on when there was uncertainty, or for instance, and sadly it may still continue, where people with certain milk contracts saw their prices plummet due to the more than decreased demand, zero demand from the coffee shop or the retail sector, or the meat markets also decreased. But so thankfully, again, we've seen those continue to improve. We've seen that the hospitality, the leisure, the tourism part of our clients' businesses have continued then, once lockdown was eased, have then flown. To link into Catherine's point, you probably now cannot buy those shepherd's huts, your yurts, your whatever else, to be able to take advantage any more than you can probably book one if you want to go and stay at one. So we have seen the recovery there, and just to perhaps highlight one point, and forgive me, I know I always sound like a misery guts trying to explain to people why they shouldn't claim this. Just make it crystal clear. Absolutely, if you have been affected, put your claim in. But to use an example, a poor crop yield, for instance, we know harvest has been variable, by variable in many cases bad this season, but I'm afraid we can't blame the weather on coronavirus. So whilst you might say my yields have been appalling, without being flippant or otherwise, I don't think spring barley has caught coronavirus, and as a result its yield has been particularly bad. So yes, you'll be justified saying my business has been impacted, but not because of that. So I'm not convinced that that might be your viable excuse for why you might make your claim.
Thanks, Neil. I think that's everything with regards to the support scheme announcements. If anyone has another question about that, do drop it into the question and answer box. Otherwise, again, as we said before, that's what the professionals are there for, to be able to advise you on all of these matters. And it does seem that there are some complications when applying, or bits and areas that you sort of need to discuss and chat through with your advisor. So we would advise that you pick up the phone, speak to your advisor, accountant, speak to us. We're there and available to help at the same time, and just make sure you put your business in the right position before you do any of this. So we'll move over slightly to another announcement, and that's the one that the autumn budget that was scheduled for not so long in the future has been cancelled, and this is now going to be rearranged for spring, or even cancelled altogether, and they're going to have one in spring. Now that provides implications, maybe benefits, maybe opportunities, maybe not, for farmers, and I just want to bring you into this discussion, Catherine, maybe just to explain how that is relevant to our farmers, what they should be doing now, and what maybe our advice would be because of this circumstance.
Yeah, thank you, Ben. Yeah, it was quite interesting. There had been a lot of thoughts being floated clearly all this coronavirus support has not come cheaply for the government. And I think everybody appreciates that at some point it's got to be paid for. And the thought was that would come through tax rises, and potentially they may have come as early as this autumn. However, with the cancelling of the autumn budget, I don't think we're going to see anything now until spring at the earliest. There's an awful lot of discussion though about, even once we get to spring, do they really want to put taxes up and hamper any kind of recovery? So, you know, there must be an awful lot of discussions going on at the Treasury about what is going to be the best way to deal with this, because they could really do with the money, but you don't want to squash any kind of signs of recovery in any industry whatsoever. I think one of the key things that had been talked about that is very relevant for farmers, and this has been floated for over a year now, is some of the changes regarding inheritance tax. Now, the Office of Tax Simplification had done a consultation a few years ago, and they'd announced some proposals that they would like to see being put forward. And we had expected some of them potentially in this budget coming up. Now, the key things that had been sort of discussed and talked about were changes with regards to agricultural and business property reliefs. Now, these are the two reliefs that may well exempt assets in your estate for inheritance tax, and mean that instead of paying 40%, you might not pay any tax at all. And so that would be a huge thing for farmers, because a lot of them are very reliant on the fact that they're going to be able to pass the farm down to the next generation without triggering any kind of tax liability. So it's been a relief that has been heavily used by our clients, and when we're looking at planning, we're always taking that relief into consideration. They are now discussing potential changes, particularly business property relief, which exempts the whole value. They're now saying that might not be sort of going to survive in its current form if it gets changed in a budget. I mean, you know, we can all speculate till the cows come home, but what I would say is I don't think the relief is going to get any better. It's only going to get worse. And so if you are looking at succession planning for your business and you're contemplating passing assets down, I do think that it's very well worthwhile looking at it now and seeing if we can get assets transferred before there is a budget. One of the key things that has been discussed from a business property relief point of view is there's a rule that says that you can have that relief on your overall business interest as long as that business is wholly or mainly trading. And so in doing that, you know, that means that in a sort of more normal sort of farming enterprise, you may have diversifications, you may have holiday lets, which in their own right generally don't qualify for any inheritance tax reliefs. You may have set up some glamping, you may have some other activity going on that doesn't qualify for any reliefs. And so when they were talking about a wholly or mainly test, we were looking at a sort of a 50% qualifying level. And so if your business was at least 50% trading, so your farming activity accounted for over 50% of it, then you should meet the test for the inheritance tax reliefs. What has been proposed is that they might raise that bar to 80%. And so it may be that if your business does rely quite heavily on non-trading activities, so you've got those holiday lets, for example, and they do form quite a significant part of the business, you may want to consider dropping those down to the next generation. It would be things like that we may well consider as part of this.
Yeah, thank you, Catherine. For those listening in now, if I was a farmer and I hadn't really started looking at succession, passing down, or inheritance tax in that situation, is now the opportune time to do it, now that we've had this respite and potentially things could change in the spring?
Yeah, I think so. I think what we find, the last thing I ever recommend is to jump into doing anything and rushing something because we think there could be tax changes. That usually plays not in your favour. You find you've gone and done something, then with the benefit of hindsight, when you've had a little bit of time to think about it, a lot of clients going, oh, I wish I hadn't done that. That was such a bad idea. We now have that time to really think about it properly. You know, these are massive decisions. When you're thinking about the succession for your farming business, huge decisions that we shouldn't rush into. But we now have that bit more time, and we can make proper, real, considered decisions for the business going forwards. So I think anyone who's minded to start thinking about that, now is an ideal time to do it.
Do you want to echo that, Neil? How are you finding?
Yeah, I think I absolutely echo Catherine's point that only fools rush in, but by the same token, what can we do? We can only plan around the rules which we know today, and if those rules lend themselves to be more generous than they think they might be, you know, whilst we said don't rush, but don't sit on your hands either. Don't then get right to the bitter end and just before we hear a budget being announced, and I think, oh, I suppose we better ought to crack on with that really, because at that point you might, you know, the ship is maybe not completely out of the harbour yet, but you do well to catch it up. So I don't ever think there's a bad time for anyone to be considering their succession planning and their inheritance tax situation. And it continues to be a fluid thing. So we plan around what we know to get someone's house in the best order that it can be in. If things change, sadly or positively, then dare I say it, we can then either, because there's, as we said, a huge amount of speculation. We don't know what may or may not come, but invariably there's not too often too many massive surprises that come out of the woodwork where there's not been some sort of inkling or otherwise. So we can always try and be proactive to it, but there might be occasion where we've done what we deem to be perfectly legitimate and strong planning. A situation changes, then potentially we then react and work to those new rules. So, you know, for anyone considering it, there isn't perhaps not a finite answer. I've done my will. That's the last time I shall look at it until sadly till someone will look at it until I die. It just needs to be constantly reviewed to make sure that it's fit for purpose. But that said, this potential sort of relief, if that's the right word, or respite, does give opportunities based around if we think, you know, that the capital tax reliefs are going to be made worse, whether that's inheritance tax, capital gains tax, pension relief, higher rate tax pension relief on pension contributions, what may or may not happen to the annual investment allowance, which clearly is and that's one thing I might just like to add in, which is a lot of our clients do take a big advantage of, is as at the 1st of January, that allowance rate drops from £1 million back down to £200,000, which, okay, it still sounds for what I might deem a normal size farm, 200,000 is a reasonable amount of expenditure, but you've got to be aware of your year end and timings of expenditure, because it's not as completely black and white as it sounds. So it just comes down to, if we know something exists, take advantage, as long as it works for you and your business. There is no point in doing something for the sake of tax, but if that was something you were going to do anyway, it would be very upsetting to have thought, I wish I'd have done that before. It's like, because we say to people is, it's absolutely the only people that have control as to when you do something are yourselves and your family. So it is absolutely within everyone's remit to consider it. Be in the capital taxes situation, the hardest decision probably people ever make in their lives, but it won't get any less hard by sitting on your hands. I think it's fair to say.
We had a question in from a friend of the firm, Richard Nocton of William Wallace. So this is probably aimed towards you, Catherine. What are your views on the agricultural property relief remaining in its current form at the next budget?
Oh, good question, Richard. And nice to know that you watch us in the morning. Very exciting. I did forget my crystal ball this morning. However, as always, we've got a few thoughts on these things. I think it's at risk. I do think it's at risk. I mean, the agricultural property relief is one of the inheritance tax reliefs that gives you inheritance tax exemption on the agricultural value of agricultural assets. So generally, we're looking at farmland. But this can be farmland that is used by yourself in your own farming business, but it can also be used by someone else in their farming business. So if you've got land that you're letting out on a tenancy, then it will also qualify. Business property relief will only cover you for assets that you're using in your own business, whereas agricultural property relief is a bit more broad. We've always thought that one could come under attack at some point. There tends to be a bit of backlash whenever it gets broached, but it could well get the hit this time. I think there could be a feeling that actually, what the public might perceive as wealthy landowners shouldn't necessarily get in all these inheritance tax reliefs when there has to be so much money found to fund the coronavirus supports. So, I think it's at risk. I think it's a risk. If you are planning anything, with any planning, so transferring land, particularly if it is rented out to somebody else, I think the time could be right to look at that transfer now. The other aspect when you're ever gifting anything is capital gains tax as well. Have a think about, are you triggering any capital gains? But often there is something we can do about those at the same time. It may be that opportunity disappears as well once we get past the next budget. So, I think there's an awful lot of speculation with regards to these reliefs. Everything is sort of gearing up, I think, for some changes. If you are thinking about passing assets down, I would say act sooner rather than later is probably my key thing.
Okay, thank you very much, Catherine. Given the time, I think we're going to draw this to a close unless either of you have anything else to say. Thank you very much for today. Neil, thank you very much. Always insightful as ever. And Catherine, again, you too. Thank you ever so much for joining us on the show. We'll put this on again. We're going to have different topics, etc., coming up in the coming months. So do keep an eye out for invitations for anyone that's on at the moment. Thank you very much for asking your questions live now and for sending them to us beforehand. It's a great format and hopefully we can continue and answer the questions you've been looking for.